So thank you very much for all coming, and thank you very much to all the participants coming from Berlin. I'm very happy and proud to present this and to do this in Frankfurt, as I live in Berlin, but I'm from Frankfurt, and I'm very happy that Frankfurt is becoming much more digital, and venture capital and the digital ecosystem is becoming a much bigger role here. So please welcome our three participants, Tatjana Wild, Rahne, and Michael Brehm. So first I would like to introduce all of you, and then we'll have some questions, hopefully interesting for you. So Tatjana Wild is a partner at Tiburon. Tiburon is a privately held active seed investment company who is investing in fintech companies, and since 2011 has done over 120 investments. And previously Tatjana started her professional career at SAP. Michael Brehm to my right. Michael is the co-founder of Redstone, a serial technical entrepreneur and founder of Rebate Networks, and previously was the executive director of StudiVZ. Michael is still a very active angel investor and is invested in more than 20 companies such as Creditech, Athenium Partners and Inventorum. And the last but not least was Rahne. Urs is a partner at Boston Consulting Digital Ventures in Berlin and also the general manager of Coop Mobility. Coop is a Bosch venture which was built in Boston Consulting Digital Ventures in Berlin. So let's start with the first question, and let's start with Tatjana's opinion on that. So when you think of an ideal setup of an entrepreneurial ecosystem, what ecosystem comes to your mind first, and why is that? Is it Berlin, is it Tel Aviv, or what do you think? Where would you start your own venture if you would?
So first of all, thank you very much for being here today. It's a pleasure for me. And back to your question. Yeah, what are the ingredients of the ideal entrepreneurial ecosystem? I think first of all, they are the entrepreneurs themselves. You need people who are hungry for success, who want to think about the box, who want to be a risk taker and want to start business. Secondly, I think it's very important to have the acceptance of entrepreneurs in the society. It's very important that to start a business, it's attractive, it's easy, and it's okay to fail. Then you need money for sure, you need VCs for all stages of companies. Then exit paths should be clear through functioning capital markets, deep and functioning capital markets. Also, I think it's very important to have a recent volume of already exited companies, so you can recycle or reuse talents or capital. And not but least is regulatory framework and IP protection. There are several elements which are also important, like a diversity of people, a relevant number of headquarters of big corporates, companies. But I think they are interesting to have, but not such so important. If I think about the ideal place to start company, it's for me still San Francisco area. And why? Because all mentioned elements of such the ideal ecosystem are available there.
Thank you very much. And I wanted to ask one thing, because I think it's very interesting what you said, and I've dealt with that question myself. So you said it's important that in that ecosystem failure is accepted. Do you really think that in Europe we are already at that point? Because I was at a discussion a few weeks ago, and we discussed that in the US it's normal that entrepreneurs have failed, and it's really accepted. It's not a bad thing. But do you really think in Europe we're already at that point?
I think the situation is changing, and if you look to Berlin, if you look to young or middle young entrepreneurs, you see that a big part of them started already not the first venture. And we, as we see, we are looking for the people who started starting not the first, but maybe second, third, or fourth venture. So I think it's the situation is changing now, and we see this already.
Happy to hear this. Thank you. Michael.
Yeah, maybe I think, I mean, generally there are three major points. Which is capital. It's research institutions. Often in tech hubs, you have large and good research institutions, and then obviously there are other like companies that you can partner with and where you have talent. But maybe let me tell you 2 or 3 stories from Berlin that I've observed. One is, which I really find interesting. I originally come from Munich and I work in Berlin. And in Berlin, actually, or in Munich, you actually have had to justify yourself a long time if you worked for a startup. In Berlin now, if you're on a party with young people, you have to justify yourself if you're not working for a startup. That's one thing. The other thing is, for example, recently there, one company that I know a few people from, they went bankrupt. And then the founder told me that actually after 3 days, the insolvency manager came in and he said, like, it was basically an empty office. He said, where are all the people, like the 20, 30 employees? We have to make like agreements for them and that they get some money from the government. And he said, you know what, after 48 hours, all were hired away. It's like if it's announced that one company is bankrupt or fails, it's like hundreds of startups and headhunters and HR people jump at them. Sometimes they tell me within half a day they get 10, 20 messages from people, hey, do you want to work for us? And then it's a little bit like, it's like stripes on your jacket, like have you worked in a startup that failed or something? I mean, it's never great, but it's also, I think, it's a little bit the attitude, don't waste time. I think we shouldn't embrace and say or glorify failure. Failure is always shit. But it's like also you have to try things, and then if it doesn't work, don't waste your time and continue to do the next thing.
Thank you, Michael. Maybe Urs, you can also not only answer the question but a bit broader, because Boston Consulting Digital Ventures are also in London and in New York, and I know you're traveling around a lot. Maybe you can also tell the differences and what you see there.
Yeah, so building on your description of what an ideal ecosystem is, I think there's little to add. But I think they're beyond the valley, which still plays another league, I guess. It's boring to discuss. I think the places like New York, Tel Aviv, Berlin, all of them have their merits as ecosystems that work extremely well in certain verticals. And if you take Berlin, for instance, where for a good reason, I live there and work there, take an interesting technology like blockchain. Funny enough, for those who don't know, the research on blockchain and so the development of blockchain is really happening in Europe. It's not happening in the US, actually for regulatory reasons. But so in Berlin, you find some of the brightest talents and thinkers in blockchain, which will transform whole industries like fundamentally. And so I believe, depending on domains you're looking for, depending on verticals, all of these 20 ecosystems that you have globally have their own merits. Tel Aviv is super interesting for hardware and what I would call more hard tech, so a lot of cybersecurity stuff, autonomous driving technologies, a lot of that like sensor-based technology is striving like hell in that ecosystem. So I think the good news is that we're finding lots of places, and depending on what you value and what you're looking for, there are really good ecosystems around the globe.
Thank you. So you're saying that it really also depends on what kind of venture you're building, and then that different cities have different values. Michael?
Can I add to one point, because I think that's a very good one. It's not only about what you want to build, but also in what stage you want to build something. Yeah. And for example, I think now to start your company in the Valley or in the Bay Area is an incredibly bad idea. Because it's super expensive, you don't get talent. Even if you get to hire a few people, immediately the big companies come and hire them away. I've heard of startups that lost their complete teams to Google, or because if Google wants somebody, they just say every developer gets a fixed salary of $500,000 or $1 million. How are you going to compete as a startup that raised just $2 million? A friend of mine, he said he raised $4 million, and he said, you know what, I can't get a single developer. I can't pay them. And he's now moving away because he said but I think now the Valley has kind of come to a point where it's like so much, I don't know, so big, and there are so huge companies that it's actually good if you want to scale your company, but it has become a really, really bad place to start your company.
To be a little bit controversial, I think Berlin is, for example, cannot say that the city has a very strong academic environment. And you mentioned this, and I think it's really, very one of very important factors. And also the fact that we do not have in Germany the very deep and functioning capital markets. It's not only it's easy to get some nice young people and to have space for them to start to work, like it is in Berlin, maybe.
So controversy is what this room needs. So fighting back on that, I think what is interesting in Berlin is that you find incredible influx from talents from all over the world. So it's probably one of the most open international of those ecosystems. And if you look for engineering talent, there's so incredible talent to come in from the eastern part of Europe, Russia. Like in a couple of ventures we have launched, I'm currently hiring a lot of engineers from the Valley or London who come over for some political reasons or others. But actually the influx from talent from all over the world is filling gaps that I agree are there from a university research perspective.
Just an interesting remark, I read that it's a positive correlation between immigrants as the founder and evaluation of the company. So maybe it fits for Berlin.
So always choose a foreign co-founder.
No, I must say one last thing, because really in Berlin, and my father always asked me, your colleagues, where are they from? And then, I realized that, and I love it, everybody's from somewhere else, and it's rare to find a new colleague, if we're looking for a new colleague who is German speaking, because most of them you will only find English speaking. And, for me, it has become normal, but I think that's great and very interesting about Berlin. So the second question is that now we've spoken about the ideal ecosystems and what really is ideal about them. So now the question is, what can we or countries or cities who want to become more ideal for entrepreneurs to build their ventures, what can these learn from the city we've just mentioned, from Tel Aviv or from Berlin? And also, if we have a broader look, what kind of venture capital practices from really more mature ecosystem we have just described can be transferred to emerging markets and vice versa? Tatjana.
It's the question, what is the definition of emerging markets? If we do look now to China and India, in the digital aspect, these countries or these markets are not emerging anymore comparing to European countries. But still, I think coming from Russia originally, what I observed in the previous years in the BRICS countries, or especially in Russia, is a more holistic or more systemic approach of VCs in these countries. So what they do not invest in their capital-intensive R&D company without investing in service-based, less capital intensive companies, because they wanted to build up the whole value chain. They wanted to be sure that the product will be delivered, that the project could be paid by users. So it's more about the portfolio creation and portfolio management, and their companies have a more strong link between each other than the usual mature market we see do. So.
Thank you. Michael?
It's a very good question. I think maybe 2 points. First on, what can you do to increase or push the ecosystem. And if you look what happened in Germany, I think I would, and what actually also, the question is always, what can the government do? And there are two things which I really like. One is the Exist program, and the other one is the Heiter Gründer Fund. And the Exist program is super broad. Basically, if you're in the university or just out of university, you get 100,000 euros that pays for your salary and the one of your co-founder for a year, and gives you some money for some additional cost. And that really enables a lot of kind of students that come out of university to keep on working on their ideas in a very broad sense. So they give out, there's a lot of spray. So this sets the seed. And then, but this is then at the point where most likely, like business angel, and not even to speak about VCs, wouldn't want to invest. So they built the Heiter Gründer Fund, and they give you, without any proof of concept, basically just an idea and the people, they give you the first 500,000 to build your prototype, to show a proof of concept. And if you look at how many companies they have founded, how many also entrepreneurs they have educated, that's really amazing. And I think the main thing you have to do is also educate the entrepreneurs, and that's at the beginning, it's expensive. And if you're a first-time founder, you always make mistakes. The ROI on investing in first-time founders will always be worse than on second or third times. So that's probably one of the, if people ask me also from other countries, then I always tell them, look at these two programs and try to implement them in your country. That's really amazing. It has worked extremely well. And if you look at emerging markets, I mean, with my former company, with Rebate, we have been active in 30 countries, a lot in Eastern Europe, in Asia. And often you have to go, it all looks great on paper. But then it comes to two things, and one is attitude also, and legal security. And I'll give you two stories. One was in Malaysia, for some reason, it didn't start working at all. So you called the CEO there and said, like, it was John, why isn't it working? Just go to some restaurants, like make some deals, put them on your website. It's not that difficult. Like, just do it yourself, you know people. Then he says, in Malaysia, he had like one employee and 2 interns. Michael, you don't understand. I'm now CEO of Malaysia. I don't do work. I only wine and dine with decision makers. Really? And then you sit in Berlin and you think, what the heck? What do you do? And then obviously you think if it was really a good idea to like invest in Malaysia, and if that's the right attitude. Or another one in Vietnam, we had an amazing company, actually at the time the largest e-commerce company in Vietnam, 1,000 people, and then the founder. And we wanted to take we had a former partner of Ernst & Young from Australia who was a born Vietnamese, a CFO who should take this company public, really on a good track. And then the founder decides that 20% stake in this is far too little for him, and that he should have 100%. So he kicks out the international management team, which we assembled with a lot of work over 2 years, the CFO, the COO, the head of risk control, the head of legal, everybody, and puts his 65-year-old Becky, who was an accountant at a state-owned enterprise, and had two people working for her, as the COO, and the rest of his family in the other positions, to run a 1,000-people employee company that was growing quite fast. And he kicked them out and then just put some of his security guards in front and publicly stated, it's now my company. And then you go there and say, yeah, but we have contracts, and there was a large group of investors. And he said, contracts? We are in Vietnam, it's a communist country. It's mine, it's yours, it's everybody's. What's your problem? And then again, you question yourself, was it really a good idea to go there? And then that was actually the point when I first understood the concept of legal security. And then actually what we did is, with a lot of political support and like lobbying, we pulled off a kind of secret service operation, and then with about 100 anti-riot policemen, we convinced the Vietnamese government to storm the company and kick them out. But you don't want to have that again. So actually, I'm not going to invest in Vietnam again anytime soon.
Thank you, Michael. Urs?
I think there's 2-3 additions to a couple of things you said, Michael. I think one really underrated player that really was important and is important in Germany in you know, having created entrepreneurship, tech entrepreneurship, is the Fraunhofer Institute, which is a really good model. You know, beyond MP3, they have been involved in lots of stuff, and I think it's something that a lot of countries can help replicate. And so that's one thing I tend to also put on the list of things that governments can do. And the other is really working on a macro environment that's really friendly for entrepreneurs. And I think it's the topics you mentioned. It's also you know, founding a company can be tremendously lengthy, complicated, and you know. And not far away from Germany. I'm currently founding a company in Paris, and it's actually surprisingly complicated. So I think these would be ingredients. And if you take private sector and private sector VCs, I think there's something interesting to learn how Berlin became such a tech hub as it has become. And I think two models kind of were at the base of that. There's Rocket Internet, and for all the blame that Rocket gets, they put something in place which is much more than money. It's money with support and services. And then to say the follow-up or spin-off, which is Project A, which is an operational VC. So again, smart money, but with a lot of meaningful services to educate the entrepreneurs on how to do it, and you know, institutionalize the learning and give that along with the money to entrepreneurs who've never done it. So I think there is both bottom up from the VC or investment community and from the government, quite some very good examples out there that can be replicated to, you know, kickstart an ecosystem. And look at it, Berlin, you know, take the new market. It's now kind of 25 years that Berlin has been humming a bit less and humming more. But it takes this kind of 2-3 decades for a city to really become an ecosystem. And so it's nothing that happens overnight.
Also, you know what's really interesting? It's not only sometimes complicated to found a company, but to close a company. It took us 4.5 years to close a company shell in Argentina. It's crazy. It's also something like you sometimes forget. Also, this kind of stuff actually people can work on.
All right, thank you so much. The next question is about venture capital. So obviously, access to money to venture capital is truly one of the most, or not, if not the most important element for an person or an entrepreneur who wants to build and scale his company. I see, or we see in different countries, you really see different trends. You see trends like crowdfunding, and also you see tremendously that corporates are massively looking into models, how they can invest, and also a model, Redstone, is doing venture capital as a service, is really rising, and it's becoming a big topic. So I wanted to hear from you what you think. Do you see these trends, crowdfunding, venture capital as a service, and also corporates trying to also become VCs? Do you see these as trends, or do you really see these as long-lasting developments?
What we think that the crowdfunding is not a long-lasting trend. With some exceptions, for sure it makes sense to found the kind of new product through crowdfunding, to have access to the market, to have access to the future customers. But we as VC see us as a sparring partner for the founders. We think that we can deal with 100% of write-offs, and it's a part of the business. And I personally think it's not a fair play for the individuals if he or she is completely not prepared for the write-off. Yeah. Regarding VC as a service, I think it's they have to wait if it's an interesting trend, if a long-lasting trend, because as we know, based on our portfolio, at least 7-8 years, you have to exit, and so we will see how the results will be of CVCs.
Thank you very much. So, Michael, what do you think?
With crowdfunding, I'm still not so sure. I think there are two different. The question is, what are you crowdfunding? And with startups and private individuals, I mean, if the market turns down, probably it's a little bit difficult. I think for a lot of the real estate crowdfunding products, that might work a little bit better because it's more plannable. And also what I think works is kind of the Kickstarter model, where you actually not invest in something, but it's just like you back up, you basically give away money for free and you hope that you get a product back. It's a little bit like donation. I also think that probably will stay. With corporates and startups and investing is always a very interesting question. Maybe the first one is always corporates say, yeah, we want to have the internal startups. And the big problem is if you are working in a corporate, and then what defines success and potential career outlook of yourself, then it's most likely how many people do you command, how much budget do you have, or how much business do you bring in? So how much do you sell? And maybe like how much do you invent or something if you're a genius. But if you do a startup in a corporate, then you have no budget, you have few people, and most likely little new business. And even if you're super successful and after the second or third year you do 10 million in revenue, imagine you're at a Deutsche Telekom. It doesn't move the needle at all. So even if you're super successful, in the end, still nobody cares. And if you fail, you're the stupid guy who messed it up. So if I was working in a corporate, the least thing I wanted to do is to be the responsible for a single startup and people tell, and now run, because you can only lose. And it's like actually a kind of a real dilemma. So the question is, what do you do? Why should people actually, smart people, good people, work in a startup? And I think there are many ways around it. And one thing that you can do is to still get access to new ideas, to good talent, to like digital change, to invest into startups, because then you get a lot of ideas. You see how sometimes, for example, corporates are surprised. They say like, where are the email servers? And I say, nowhere, because they use Gmail. It's in the cloud. Really? Easy things like that, but then also new business models. So, I mean, obviously, and then that's why we actually founded Redstone, where we offer corporates basically our whole deal flow. Last year, we looked at 7,000 startups and then slice and dice it with respect to what they want, and then they can just pick and say, okay, we would like to invest in that, and then they try to form a partnership with that startup that's hopefully beneficial to both, but then you mitigate the first risk. So I think it makes a lot of sense in the broader sense to like to help large corporations to digitalize. And it also makes a lot of sense for the ecosystem because the large corporations have so much money. It's incredible the amount of money we have in Germany. And if you look it's not even a percentage point of that money goes into the startup ecosystem, either through direct investments or even like through fund investment. A lot of the large corporations should, I think, also invest as LPs, as limited partners, as investor, into some of the existing venture capital funds. Or into university and research projects, all of that, and see that we together push the system, because it's often not like the, let's say, enemy is not the company I've been fighting with for the past 50 or 100 years. It's often the large American, and I think in the future also a lot more the large Chinese companies who are coming here, like the Alibabas and Tencents, which are valued hundreds of billion. And actually, I think like most of the large tech companies in the world now are higher valued than the whole DAX together. That's crazy. Yeah, so that was the answer.
Speaking of crazy valuations, no, but I actually I fundamentally believe that corporates actually have a massively bigger role to play in tech innovation than today. And I believe so. If you look at numbers, I mean, as an asset class, venture capital is still measured in billions. And if you look at the balance sheets where we see trillions of cash lying around at lower than 1% interest rate being paid on it, there is massive capital to unlock that is just dwarfing what venture capital has so far put into the tech industry. Now the question is how to do that, and I think your question was, do you see a trend there? I think there's a theme, which means that it's consistent, and there are different variations of it, which is corporates are struggling and continuing to experiment with ways how to deploy their capital and their assets for successful innovation. And so yes, one of the core struggles struggles they face is that some of the rules that or the rules of the game that make entrepreneurs successful outside don't really comply with how corporates are structured, from mindset to routes of promotion. On the other hand, there are lots of conduits and vehicles how to do it. And I give you one example. One company we founded, and so BCG Digital Ventures, my company, we are a company builder exclusively building companies with corporates. So, I mean, I shouldn't be working for the company if I didn't believe in it. And so we launched a business with Qantas in Australia, which is an insurance business. And why should an airline run an insurance business? The short story is it launched, it's meaningfully successful. And why? Because it had access to millions of existing customers under the loyalty scheme of Qantas, and they didn't pay a dime for user acquisition, for having millions of subscribers. And you all know that customer acquisition is very often the biggest cost bucket for startups if they want to scale. And so corporates have really interesting assets to unlock for unfair advantage against the fast startups out there. So I would controversially say I have strong belief that corporates will own the next horizon of innovation, and there are obstacles that they understand well enough to find new ways how to deploy better against it.
Thank you very much. And I think the last question is very fitting to what we've just discussed, because I think it's interesting to see. I was thinking myself when I was preparing this speech and looking at TechCrunch and looking at the successful startups and where these are coming from which countries, and also then I was thinking, are there really successful startups or companies who've really made it, which have been built out of corporates? And therefore, I would like to ask you, do you really think that corporates that are building ventures within their existing structures can be as successful as when you're building your startup outside or without a corporate? Tatjana.
So, Lea, you mentioned that I started my professional career with SAP, but I spent also 20 years working for big corporates, for large corporates in the financial services industry. So now to my personal experience, I think for the large corporates, it's very difficult to feel themselves like an entrepreneur, because risk avoiding behavior is still the part of the corporate culture. I think that the corporates need they need cross-functional teams to start the project, and not only to start the project, but also to move the project and that the project became a real part of the real business segment. Then, in my opinion, it's a mismatch between the time needed to become a company successful and the C-level management duration contract. So I mentioned already the company, usually you can see the real success after 7-8 years, and they have contracts for C-level management around about 3 to 5 years. So it's really difficult for the people to take a risk and to not to see the results. I think the one sentence which I like very much, it's from VCs. They tell the companies or the founders to ask for forgiveness and not for permission. And if you work for a large corporate, you cannot behave like this. So you have a different attitude. So back to your question, I think the corporates should change themselves very much, and then maybe they can become successful. So otherwise it's difficult.
Thank you very much. Michael?
I think actually the question is, how do you define corporate? And even for example, if you look at Google or Facebook, they are now really large corporates, and they're really struggling to innovate and build startups from within. I'm truly convinced that corporates are really bad founders. So they should either invest into companies, they should buy more existing models from company builders, or should just do large M&A projects, and that normally works a lot better. And if you look, Facebook is a great example. I mean, Facebook itself is a huge success and develops and continues to be innovative, but have their basically most of the major innovation roles in messaging, in video, even in pictures, they have missed. So they paid a lot of money for WhatsApp, they paid a lot of money for Instagram. So if you look now at the kind of enterprise value of Facebook, a very big chunk comes out of assets that have been acquired through M&A. And if you look at and for Google, it's the same. YouTube is a huge Salesforce. Many. So I think also. So that's why if you, I think that especially the German European corporates need and the more traditional ones need a better and more and bolder M&A strategy to really prosper. I think that's the much better way, and also it's a lot more beneficial to them. I mean, even if they found 10 successful startups and each does a few million in revenue, in the end it doesn't make a big difference. They need to show some success, some growth, so they need to buy later stage company, and that's why you have this kind of the whole value chain. You have the founders, then you have the angel investors, you have the VCs, then the private equity firms, and then the corporates buy them, and then everybody's happy.
One question. So obviously, as at Redstone, we are investing for corporates, and then obviously not only investing in them, but then we try to connect the dots. We try to connect the technologies or the structures of the startups with the structures in the corporates. Do you think it's, or do you see it easier than you thought it was, or are you surprised how well it goes? How do you? No, I'm really interested to hear that.
No, it's. I think like the key with whatever you do is indeed, and especially if you invest as a large corporate into startups, is not only you can do the investment, but then what do you do with it? So the really successful companies and corporations, they do not only put a lot of emphasis on the investment phase, but then also on the connectivity phase. And one great example is actually Samsung. They have about 15 to 20 people on investment team, and then in their headquarters they have over 20 people also in the VC who are just there as relationship managers for the startups they invest in. And that's so they have the same amount of relationship managers than investment managers, and that's why actually if you are a startup and invested by Samsung, it's actually pretty cool because you get a lot of support by them. And then you have others, and I think that's not a very good idea, where you actually have very little support and just the investment team, and then that doesn't make so much sense. And it's something that we always try to tell companies and push them. I mean, not only our customers, but in general, something we speak very openly about it, because I think it's very, very important. And otherwise, why should you take money from one corporate VC if there's no support? I mean, then take money from whoever you want.
Thank you.
Thanks all.
Urs?
Again, I think a lot of meaningful things were said. So I think one angle I'm seeing though is some of the things that make big corporates create difficulties for big corporates. May they come from the tech industry or old economy. One thing that's really changing the old economy is we are seeing now the first CEOs being digital natives, which has not been the case.
Where?
Look at Allianz, and look at what Allianz. I don't know whether you're aware what Allianz is doing, but they're doing some pretty big stuff. Again, to be proven whether it's successful, but it's pretty bold. And so I think you see the first CEOs of big, large, stocks being digital natives, and I'm curious to see how that changes the thinking about, let's use the bad word of failure again, risk taking, and experimentation with models that overcome the failures of corporate VC, models from the past. Where I fully agree, there have been a lot of models or patterns which just did not work. And so I think this slowly, but I'm pretty convinced this will really change how a corporate will operate that, and then they will do it more successfully.
Thank you very much. And one last question. So as you said, you're building companies or startups for corporates. So how is it when you start the company? Do the corporates really want to communicate that it's a, let's say in your case, Coop, it's a Bosch company, or you're trying to really push and tell the world that it's a company and not really being connected 100% to the corporate?
think it's very different cases. I mean, sometimes it always depends on what the intent is afterwards, and what the benefit or non-benefit is of having the corporate being very visual behind it. I think broader speaking, they turn to us because they are seeking for models how to actually create new enterprises, new businesses, and then also for help for how to integrate them without killing them, because, as you said, the connectivity phase or integration phase of these kind of incubations is non-trivial. Yeah, and so sometimes they want to be, very publicly out there, and sometimes they want to be silent and stealth about it. Especially, I mean, we're building businesses where very often corporates say, I'm willing to take on big risks for my core business. So we are actually for an auto financing company, so that is financing leasing deals for cars. We built a business that's directly attacking their core because they are convinced someone is going to do the marketplace for auto financing. Let's do it ourselves. And so they did it without putting their brand underneath it, for good reason. I think to be told soon, I guess. But so I think different strategic considerations.
Very interesting. Thank you very much. And I enjoyed the panel a lot. I hope you also did. And maybe if you have a question, let us know.
Thank you very much. My name is Jochen Biedermann. I'm a fintech entrepreneur in Stuttgart, Frankfurt, and Hong Kong, but also the coordinator here for the Financial Center for Fintech. You've spoken a lot about Berlin, which is without any doubt a success story in Germany and all over Europe for tech entrepreneurs. But we haven't heard much about Frankfurt, and we are here in Frankfurt, not by chance. So from my point of view, the ecosystems differ a lot. Here the focus in Frankfurt is a lot on B2B. You see predominantly fintech, cybersecurity, bio and pharma, while Berlin and other ecosystems are different. What does it mean for risk capital provision?
What do you mean? What does it mean for venture capital? You mean? I mean, the one pattern you see is that actually now good companies are built basically all over the world, and it's more and more detached from the location. And while there's an interesting statistic, I think 10 years ago, if you were to build a billion-plus company, 90% of these cases took place in the Silicon Valley. Or 95%. And if now you fast forward 10 years and today, actually far less than 50%, or actually just 20-25% of the billion-plus companies in the world are built in the Valley, and I think this percentage will further shrink. So it basically means that you have to do more traveling, that you have to be more flexible, but on the other side also. I think the smaller an ecosystem is, it's actually in general a little bit more difficult because it has a lot of implications on fundraising, on knowledge sharing, on kind of hiring people, etc. So it's not so easy. I would personally. I would definitely not to build a company. I would not choose the Valley, but I would always try to go into a larger hub and to say like, I think that sometimes also there's the total opposite. Now you have like co-working spaces in Bermudas or in Bali. I'm not so sure about that concept either. So I think that's pretty difficult. Yeah, I don't know if that's, but I mean, people are very open to invest everywhere. But even if they want so, it's interesting. For example, that for High Tech Gründer Fund, which has done over 400 or 500 investments over the last past years, over 30% or 40% of their capital went to Berlin, and then another 40% went actually to Bavaria, most of that to Munich. And then there were about 20 or 25% for the whole rest of Germany. And they said they have the political mandate to equally distribute it. And they said they were not able to do this because of the quality and the amount of companies they found. And I think that tells a big story. And that's obviously something we should work on, and which in general is also a little bit a problem because like the tech centers tend to monopolize a little bit. And I think especially for the rural areas in many countries and also in Germany, that might be a problem in the future.
Thank you, Michael. Any other questions? Yeah, please.
Hi, I'm David from Acomodeo. It's actually a startup based here in Frankfurt, and it's not fintech. But I have a question for you, Urs. Do you have, what is your experience with corporates trying to apply their, or the corporates you're working with, trying to apply their structures and like hierarchies, I don't know, all the compliance, data security, and so on, all those structures on the startups you're building with them? Because that's what I feel, that they always try to have the power in the end.
I think it's a very bad idea.
Yes,
but I think more differentiated. I think you know, the whole set of compliance rules in German, Verfahrensanweisungen, you know, what you have in big corporates, all of that has a reason to be, and some of that. So I think if you can have kind of a best of both worlds approach and pick and choose some of that can actually lead to advantages. So may it be you know, data security, data privacy. I mean, there are so many startups out there who actually got bankrupt because they lost trust of their users because of that, right? And so sticking to that. And by the way, I fundamentally believe that is something that actually over time can be something interesting for Germany as an advantage for our landscape here. So I think some of these rules actually have a lot of meaning, but they need to be applied in a meaningful way, and especially in a way that is, you know, dosed well enough for what a small startup team can digest, and without being derailed from focusing on building the stuff. So I think it's a conversation about where is value, and you know, and then there's a timing question about it.
Thank you, Urs. Thank you, everybody. Thank you, Tatjana. Thank you, Michael. Thank you, Urs. I hope you all enjoyed it, and hope to see you soon.
Thank you.
Yeah, thank you all. For you as well. Falls es kalt wird.